All right. It's Tuesday, May 12th. This morning we had CPI numbers come out and it caused a little bit of a reaction in the market. First, the market went up when the first numbers first came out. Then, when the New York Open happened, price came way down by several hundred points. And then eventually, price returned back to the upside to close at the highs. So, I've got the candles hidden right now. I'll show them to you. This is a 15-minute chart, and here's kind of an indication of what happened today. We had this massive sell-off here at the open, followed by a corrective wave here, or a bounce back, and then with a nice big powerful candle here, elephant candle, we broke above this blue line. This blue line is the 1 minute 200 EMA. It's also another way of saying the same thing is that it's a 15-minute 13 EMA, 13 and a third to be exact. And what I learned about this blue line is that if I only had one EMA to have on my chart, this would be it, this blue line. I also have this black one, which is the 1 hour 13, and the red one, which is the 4 hour 13. But I like the trades that I get off the 1 minute 200, which is also the 15-minute 13, because institutions tend to be short below it and long above. So when you have a fast cross, which occurs going above the line, and then a corrective wave pullback, and then a continuation wave candle, then you know you've got something to work with. You know you might be at the start of a nice, big, powerful rally, which in this case it was. So how do you get into this with the minimal risk? Okay, let me show you the way to do that. Okay, so number one, you want to make sure that if you're going to go long, you're in concordance with the MACD, and in this case you are. As a matter of fact, we had a fast cross here on this at the completion of this pullback candle. We had such a strong push up here that it drew the averages up on the MACD, which is actually measuring the difference between various moving averages. And we then had a fast cross here. So by the time you get ready to trade, as with this is the trigger candle, which of course that's a continuation candle if you follow the ICC methodology, which I do, which basically means indication, correction, continuation. And that plays out very simply here, like this strong indication wave, this continuation wave, and this, corrective wave, and this continuation wave is the beginning of the continuation, which is the entry. Okay, so we don't enter right here at the completion of this 15-minute candle, though. That's the secret to this whole sauce here. What we do, okay, is we look at a swing high and a swing low for the last couple of candles here. So once we know we have a continuation wave, then we're going to look at swing high and swing low and find the midpoint between the two. So the swing high of this continuation candle to the swing low of this last corrective wave candle. Okay, that gives us this panel here, this 0.382% of the move and 0.5% of the move from this point to this point. Let me just show you that. From this point down here up to, from this point down here, I just want to be crystal clear here what I'm measuring. I'm measuring the swing low of the last candle in the correction wave to the swing high of the first candle in the continuation wave. I'm taking that measurement and I'm looking at 50% and 38% using a fib tool. And so what's going to happen is I'm going to put those on here, and then I'm going to let price dip in there, tap that liquidity that's going to be sitting there, and then get long at that point. Okay, and just from a perspective of the faster candles and what I see when I'm executing, I'll switch to a 10-second candle at that point and put it on Heiken Aishi. And Heiken Aishi, what that does is it averages the existing candle and the last candle so that we have an average, and it smooths out the rough edges and allows us to see exactly where the pivot is taking place, you know, with laser focus on a micro level. Okay, so let's go ahead and take a look there. Once we have that panel drawn by taking that swing high and that swing low, from that last swing low of the last correction candle and the swing high of the first continuation candle off of that blue line, right? That's when we get this reversal panel. And then by putting 10-second Heikin-Aisha candles on, we can see exactly where the equilibrium occurs right here on this doji right here. Is that's a perfect equilibrium between the sellers and the buyers. And then once we have one or two candles here, we can go ahead and get long, okay? And that's our long entry right there. Boom, boom, boom. Take the long right here. Just like that. Maybe a 25-point stop, something like that. And then just ride it up to the next resistance, which in this case is the 1 hour 13, okay? Also known as the 15-minute 50. So now if you want, what you can do is you can, it's going to come all the way back usually for a throwback to try to shake everybody out before it continues higher. So if you really want to make good bank on this, you can wait for the throwback, get in then. Wait for the throwback, get in then, and then, you might need a little bit wider stop possibly, but that's when it really cranks, to the big time here. So in this case, you'd probably get like a 3.3. So anyway, that's how I look at the 15-minute candle as pertains to the 1 minute 200 blue line. I call it my blue line, my 15-minute money line. I call it my 1 minute 200. I call it my 15-minute 13 and a third. Lots of names for this line, but it's basically the thing to remember about it is that it is where institutions will make a commitment. Okay, so above the line, if we're moving higher, institutions will tend to make a commitment of once we cross over and hold, back test and hold that blue line. On the short side, institutions will tend to make big commitments once we break through and continue on down. So yeah, the blue line, which is, I keep it on TradingView. There's a indicator called customizable daily EMAs. So I just put it on that. I just open up one of these if I want any one of these lines here, and I will show you exactly how I do this. It's pretty simple. Any EMA tool will really work, but under settings, I'll just simply put 1 minute, and then the 200 I'll turn it blue because I like the color blue. I'll uncheck the other ones, and then I've got my 2 minute on there. Okay, so that's how I get it. So anyway, that's really about it for now. That's all I wanted to show you. It's a great way of trading. I really love this this type of trading using the fib levels. Once you've identified which candle or candles you want to measure, and then you just go from there. Okay, that's about it for now. Take care.